Thank you, Mr. Nikhil. Hello to all and welcome to Heranba's Q1FY22 results call. As you all are aware, the second wave of COVID-19 pandemic wreaked havoc across industries early this year, and its effects are still being felt as the second wave continues in some states. Even in such difficult circumstances, Heranba has shown remarkable resilience and good overall performance. We have always adhered to the strictest hygiene standards in all of our facilities. Employee well-being is important to us, and we will continue to exercise extreme caution and social distancing in the workplace. I am pleased to report that we have maintained our momentum from Q4FY21 and have started the first fiscal quarter of FY22 with a strong set of numbers. The business has shown perseverance in the face of adversity while focusing on growth and success. Even during one of the most challenging years in modern history, when the COVID-19 pandemic affected the majority of global companies, Heranba maintained its growth trajectory and achieved one of its best financial results in history. The company was able to accomplish this through its unwavering commitment to innovation and excellence. With a diverse product range, a strong technical emphasis on product quality, and integrated production facilities, Heranba is well positioned for sustainable growth in years to come. Throughout the quarter, the company maintained a strong emphasis on business continuity to ensure that production activity and supply chains were uninterrupted, while also striving to enhance the sales on a continual basis. We have a sharp uptick in our domestic revenues. This quarter, our domestic revenues formed 62.1% of total revenue from operations. In absolute terms, our domestic revenue grew by 56.92% in Q1FY22 on year-on basis, and our exports grew by 6.96% in Q1FY22 respectively. Export growth was marginal due to scarcity of containers and backlogs at ports. In terms of business mix, our technical grew our revenue this quarter, contributing 72.75% of revenue from operations. There has been a growth of 44.56% in technical revenue as compared to Q1FY21, while our formulations grew by 10.4% this quarter compared to Q1FY21 last year. Public health has doubled in absolute terms this quarter as compared to Q1FY21 as we see the return of government contracts. This quarter we have received EC for our Karigan expansion, and the construction work is in progress and will soon reap the benefits of the same. We intend to capitalize on opportunities generated by various technicals going off patent in the coming years by manufacturing and supplying generic variants of the technicals in the highly regulated markets of the United States of America and Europe. In the international formulation market, we aim to grow our presence in established countries such as United States of America, Europe, and Latin America by strengthening our partnerships and introducing and optimizing products with a competitive edge. On the research and development front, 5 new compounds are being evaluated, 2 of which are fungicides, 2 of which are herbicides, and 1 of which is an insecticide for exclusive sale in European and United States of America. The company is well poised to build on the strong operational competencies developed over the last few years. I am hopeful the company will continue to grow and surpass new milestones in the years to come. We continue to see FY22 as a critical year in Heranba's trajectory and are optimistic of the future. This concludes my planned remarks and will now hand over to Mr. Bhakna, our new CFO, to take you through the financials. Thank you.
Thank you, sir. Good morning, everyone. I would like to briefly touch upon the key performance highlights for the first quarter ended June 2021, and then we will open the floor for question and answer. On the revenue side, Q1 FY22 revenue rupees 3,556 million versus 2,692 million in Q1 FY21. A growth of around 32% year-on-year basis and growth of 30% on quarter-on-quarter basis. Looking at the EBITDA, Q1 FY22 EBITDA is rupees 690 million versus 435 million in Q1 FY20. Growth of around 58% on year-on-year basis and growth of 9% on quarter-on-quarter basis. Q1 FY22 EBITDA including other income margin at 19.6% versus 16.1% in Q1 FY21 and 23.5% in Q4 FY21. Despite the challenging environment, the margins of the company have been stable as a result of our strong product mix and presence across geographies. Coming to profit after tax, Q1 FY22 PAT at rupees 473 million versus 285 million in Q1 FY21. A growth of 65.7% on the year-on-year basis and growth of 9.69% on quarter-on-quarter basis. This resulted in the EPS being at rupees 11.84 during Q1 FY22 versus rupees 7.32 in Q1 FY21. A growth of 61.7% increase year-on-year. That concludes the update on financials, and we will now open the discussion for question and answers.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question at this time, please press star 1 on your phone. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Arshit Shah from Veto Capital. Please go ahead.
Thanks for the opportunity and first of all, congratulations on a great set of numbers. So my question is firstly on the export front. So if you see the growth on the export is slightly lower in terms in single digits, and domestic has actually shined at almost 90% growth. So is there some structural shift, demand shift, or is it more related to logistics issue? And second follow-up on that is, I mean, how could you get such a large chunk of growth in the domestic business given that you are more export-focused company? So is there some extra tailwind in the domestic market? If you could highlight, that's my first question.
Yeah, hi Varshit. So basically, regarding the exports, so this year, as it is already known in the market also, that there is acute shortage in getting containers for export market. So there were some logistical difficulties. That's why we had to focus more on domestic. And as for your second question, in the past also we have already mentioned that our product is saleable across the globe. We have registrations across in India as well as in the export market. This year, because of some logistical issues, this quarter we could not sell in the export market more. So we focused more on the domestic markets.
So the demand is not lost, right? I mean, it's
demand is not lost. We do have orders, but the movement is slow.
Okay. So it's more of a booking issue rather than a demand issue.
Right.
Thanks. My second question is on the new products, which I think I missed that comment from RK sir. If you could just repeat that comment. And second is, how do you see the new product pipeline panning out over the next 2 years in terms of, if you could just split the launch dates in terms of maybe years, maybe 2 products which could come in FY22, how many will come in FY23, a tentative sort of a timeline for the new products which you're planning to launch.
So for your second question, we would launch around 4 to 5 products next year. And in the FY24 also, we would have similar plans. The first question we did not get you.
No, I think that's answered. And secondly, if I see your margin growth in terms of the gross margin front, you have done almost 290 basis jump in gross margin. In fact, if I see your EBITDA margin, largely it is driven by gross margin jump. So, what is the key reason for this improvement in gross margin on a YOY basis? And second is that we had cost pressure, especially on the freight and the raw material side, but there's no dip in no significant rise in other expenses. So, have you been able to pass on all of these cost-related inflation to the customers?
Yeah, we've been able to pass on the freight and all logistical related expenses to the customers. And this quarter, our domestic sales has been more. So that way, there's no such reflection in our expenses also. Secondly, your second question was?
On the improvement in gross margin. So what has driven this improvement? Is it the product mix? Because you don't have any significant new product launches. Is it the product mix?
Yeah, we had 2 product launches. Means we increased our volumes in the existing products and launched 2 products in the technical side. And we also had few launches in the formulation side also in our branded segment.
Okay, so largely basically some new launches which are higher margin and product mix.
Yes.
Sure. And one last question, if I could squeeze in. Your employee expenses percentage of sales is lower, although it's increased on absolute basis. So is it just a COVID-related saving and will normalize going ahead, or is it something sustainable?
Which expense?
Employee expense.
Employee expense.
As a percentage of sales, it's come down to 3.9% from 4.5%.
That would be in the range of 4.3, 4.5%.
On an annual basis?
Not annual.
Okay, so this is just temporary for the quarter. Okay. I'll get back in the queue for follow-up questions.
Okay.
Thank you. A reminder to the participants, anyone who has a question at this time may press star and 1 on your touchtone telephone. The next question is from the line of Saurav Shah, who's an individual investor. Please go ahead.
Yeah, thanks for the opportunity. I just want your comment, which I read from one of the sites. I think this was part of your IPO DRHP. So
I'm sorry, sir, the audio from the line is not very clear.
Is it better now?
Yes, please, sir.
Yeah. So I wanted the comment of management on some DRH filing, wherein it states that there are some 500 criminal proceedings underway, and that company has been classified as willful defaulter on a 49 crore cooperative bank loan, which was availed by a group company. So this would be my first question, and the second would be what will be the proportion of technicals and formulations going forward, and how will the proportion vary from quarter to quarter? Yeah, that's it.
So your first question was related to the associate company's willful defaulter thing?
Right, sir.
That is completely paid.
Mm-hmm.
It's not an issue anymore. And secondly, what was your second question?
On technicals and formulations.
That will be in the range of around 65 to 70%. Technicals to formulations, even going forward.
Right.
Thank you.
I don't have any follow-ups. We can move on to the next.
So you have any other questions?
No, we can move on to the next.
Okay, thank you. The next question is from the line of Karthik Bhatt. Please go ahead. A reminder to the participants, anyone who has a question, please press star and 1.
There are no questions. Hello.
Ladies and gentlemen, anyone who has a question, please press star and 1 on your phone.
तुम्ही ज्या व्यक्तीशी बोलत आहात हॅलो तुम्ही ज्या व्यक्तीशी बोलत आहात त्याने तुमच्या कॉलला होल्डवर ठेवला आहे कृपया लाईनवरच राहा The person you are speaking with has put your call on hold. Please stay on the line. आप जिस व्यक्ति से बात कर रहे हैं उसने आपकी कॉल को
So you may proceed. We'll take a next question from the line of Alisha Mahawla from Envision Capital. Please go ahead.
Hi, sir. Good morning. Thank you for taking my question. And that the growth of the team this quarter
Voice is not audible.
is audible.
Miss Alisha Mahawla, can you please speak?
Hello, am I audible?
Yes, ma'am.
Hi, good morning, sir, and thank you for taking my question. So I just wanted to understand the growth that we've seen this quarter. Is this volume growth or value growth? Can you break that up for us?
It's a mix of both, mainly volume growth.
Okay. And so is there any seasonality in our business? Because we talk about doing an 18-20% growth on full year basis, and we've done much stronger growth than that. Are we expecting a softer maybe Q2, Q3, or are we expecting the whole year to be stronger than what we'd earlier anticipated?
So agriculture as a segment is definitely seasonal. So there is seasonality, but we are spread across the globe. So if you say Q2 would be strong in India, then Q2 and Q3 would be good in India, where Q2 would be the strongest. But when it becomes softer in India, we export in foreign countries. So that way we've been able to fairly maintain our growth. Even quarter-wise, if you see, there's not big difference in our quarters as compared to rest of the industry players.
Exactly, I understand that because you have a healthy share of exports, we do see a lot more consistency. So considering the result that we've seen in Q1, we are expecting on full year basis to have a strong year.
Yes. We'll be able to maintain 18 to 20% growth.
Okay. And so, while you did touch upon the increase in gross margins on YOY basis, largely because of new product introduction and product mix, what is the reason for the dip in gross margins on Q-on-Q basis from Q4 to Q1?
Again, product mix only. So in Q1, you can say now we are selling more in the domestic market. So the product mix changes. When last Q4 we were selling in the export market, there was a different product mix. So yeah, it is majorly the product mix which has changed in B2B segment, export to domestic, and quarter to quarter. The products are also different.
Okay, but if I had to look at it from technicals to formulations, technicals is where most of our revenue comes from, and also is a relatively higher margin business, and that business has seen a very strong growth. So then why are we still seeing this dip?
That's the reason is the same only, product mix. There are a lot of technicals that we make. So depending on the market that we cater, the production also, the quantities also switch. Our production facility is fungible, and we sold more of some different products in Q4 and different products in Q1 now.
Okay. And so what would be the sustainable gross margin for our business then on full year basis?
Around 35-36% we would say. It could be higher, it could be lower. It will be standard, but this should be an average that we say. So if you see last year also we've been able to maintain this 35-36%, where quarter to quarter it may go higher, but we've been able to fairly manage this range.
Okay.
Even on the lower side, we've been able to manage around 35% gross margins.
Okay. But this quarter we've done close to 32%. So you're saying it's an aberration, and on full year basis we should come back close. 4%,
34.5% we've achieved this quarter.
Okay, understood. And so what is your current capacity utilization levels?
Majorly in our technical facilities it is around 90%. So with every debottlenecking it again goes back to 90% only. And the formulation capacities we have around 55%, which with the new registrations that we get, this also capacity utilization would go up. In future, we've already put up in the board that we would have one more unit coming up in Q3. By September end, October beginning or so, it would be ready. So that would be a new site. Again, that would be that would be a technical site only. So there also that would also add to our volume growth as well as our total turnover.
Sure. So just for a clarification, this site that you're talking about will be available from Q3 of this financial year.
Yeah.
And the expansion you're doing at Sarigam is a greenfield site that will come almost after 2.5 years.
Currently, Sarigam is a formulation facility where our capacity utilization is around 55%. So there also there's a lot of scope where we can increase formulation business, which we will be able to see in this Q2, as well as if the logistical difficulties that we are facing in the export market, if it is solved, then maybe in the future quarters also we will be able to see. And technicals by next year, we had said Q4 this year, FY22 Q4, but maybe there would be some delay because of COVID. There were initial one quarter there were some issues, so little plus minus would be there. So instead of Q4, maybe next year Q1 or so. The work has already been started.
And this is the plan for which you're saying you've received the EC?
Yes. We have received EC in both Sarigam as well as Saikam. So we can start our activity in both the places. Currently, we've started our activity in Sarigam. In Saika, we received last month only, that is July. So our activity would start maybe in Q3.
Okay. So what is the total capacity that we're adding in technicals? The one side that's coming in Q3 and this other side that you said probably by end of year, early next year. So what is the total capacity that we're looking to add, or what is the total capex that we're looking to do between both of these sites for technicals?
It would be phase-wise that we'll add. So you cannot say, we will not be able to clearly tell you how much. Maybe somewhere 5 to 10,000 tons we will be able to add as phase 1.
Okay, so while I understand you will add it phase-wise, what is the total capex you're looking at doing at this facility?
We had told in the earlier con call also that we have planned over the 3 years around 250 crores in 2 to 3 years.
Okay, sir. Thank you.
Thank you. A reminder to the participants, we request you to limit your questions to 2 per participant. If time permits, we will come back to you should you have any follow-up. We have the next question from the line of Tanit Singhal from SSL. Please go ahead.
Thank you for taking my question, and I congratulate the management for an excellent quarter. My question was regarding the overall annual margins that the business is producing. So before 2020, I can see that the margins have been around 12, 13, 14%. So what gives that in 21 we have produced margins of 18%, which is a very substantial jump. So what have been the reasons behind this increasing operating profit margins?
So I think it has been year on year we have been able to increase gradually. Could be three major reasons. We've got a lot of registrations in India as well as in the export market. Secondly, we had a very low base in our branded business, which has grown over the last 2 years. Third, operational efficiencies. And fourth is the product mix because of the registrations that we received.
Okay, sir. And the question was, going forward, can we maintain these margins?
Yeah, we'll be able to maintain this kind of EBITDA margins.
Okay, sir. And I got my question. Okay, I'm done. Thank you.
Thank you. The next question is from the line of Pranati Trivedi from Electrum Capital. Please go ahead.
Hello. Hello.
Yes.
Yes, ma'am. Yes, go ahead. Thank you for taking the question, sir. Congratulations on a good set of numbers. Sir, in your DRHP, you had mentioned that your market share is around 19.5%. Have you gained any market share in the last 2 years between 2020 and 2021?
Basically, the industry has been in this range. We'll say we have maintained our stand.
Sorry?
We'll say we've maintained it. So we've not tracked what our current market share is. So we've been able to grow our business. There's no addition in the players in India or in China. We've heard of some additions, but they are for different products. Whereas we've not yet even started business in those molecules. So I think we've been able to maintain, we'll say.
Okay, sir. Sir, could you also give some color on how the industry is going to pan out, especially in the Indian pyrethroids market? If you could give some industry perspective to us, that's going to be my last question.
Basically, we'll say we should not consider pyrethroids from only an Indian market perspective because we have a very good export market also for pyrethroids. And this quarter itself, we have proved that even if we've not sold much in the export market, we've been sufficiently able to manage by selling in the Indian market. So that's a boost that if the export market is there, if there's no issues, we'll be able to sell in the export market also. Secondly, we've expanded our product range. We've started, our base was from pyrethroids, but we are not confined to pyrethroids today. We have other molecules also. And that with time we'll be adding new molecules which would be in the other than pyrethroid segment also. So yeah, does that answer your question?
Yes. Could you give some color on what these what kind of these new molecules would be in agrochemicals? What kind of chemistry would that be? Could you give us some color on that?
Yeah, we've said that 2 herbicides, 2 fungicides, 1 insecticide we've planned. There are others also which we've actively developed or we are working in our R&D facility. But some registration activities for these molecules we've started. So that's why we are telling about this. So this would not be from the pyrethroid segment. We definitely want to add more in the pyrethroid range also from our existing one, which we are not counting. But the 5 molecules which we are talking of is from the other than pyrethroid segment.
Okay. Thank you so much, sir. Thank you for answering my questions and good luck.
Thank you.
Thank you. The next question is from the line of Vijay Chauhan from Bright Horizon. Please go ahead.
Yeah, so congratulations on the good start of the numbers. So I just wanted to know from the long-term perspective, on the 3 to 5 years perspective, so what kind of revenue growth we are looking for as our capacities are coming online? And if we look from the a decade-long perspective, so how are we looking in that direction as well from very long-term perspective in this business?
First question I'll answer as we said 18 to 20% will grow YOY over the years. Second question we do not get it.
So from so beyond 5 years, because the business will keep on growing in post 5 years as well. So is there any plan or where we want to go ahead, like a long-term vision that our business is set that after a decade we should be somewhere around this in terms of the portfolio of our products or something like that?
We should be one of the top companies in our industry.
Okay. So, I think that's it from my side. Thank you.
The next question is from the line of Pratik Chaudhary from Samarthya Capital. Please go ahead.
Hello.
Yes, sir. You can hear.
Yeah. So you said what percentage of your revenues currently are from pyrethroids?
Pardon? Percentage around 60-62%.
Okay. And what was this, say, about, 1 or 2 years back? What was this percentage?
Sir, it was around 65. Before that, I think if you see, it is basically we were into only pyrethroids. But over 2015 onwards, we started applying new registrations and entered new products. So we can say from 100 to we've come down to 60 because our base has also gone up. So now we've touched 1,200 crores this year.
Mm-hmm.
So in that way, we've reduced our exposure. Not reduced, we've maintained it. But because of new additions, that portion has gone down.
Okay, and right now you're saying it's about, 40% is non-pyrethroids.
Yeah.
And how do you see this mix changing over the next few years?
So pyrethroid as a group is very good. It's one of the best insecticide group, if we say. And it's grown very well also over the period, and we feel it will grow also well in the insecticide space. But yet we've planned into other segments also, seeing the growth and seeing the niche in each market or the scope in the market. And we plan to introduce new molecules in the other segments also. Because there are a lot of herbicides and fungicides which show good potential. And with the entire China One policy, definitely there'll be a lot of countries that are shifting their thoughts from China to other countries like India. So that gives us an added advantage.
And what sort of are we looking at, like fixed offtake or a contract manufacturing kind of opportunities as well?
Currently, we do have such inquiries from multinationals, but the margins that they have pitched is low, which we felt from our existing business or in the segment that we want, in the CRAM segment also, we could get a better business by not doing CRAMs. But as and when we get good opportunity, we'll take it up. We have good land parcels. We have good relationships. We yet supply to multinationals, but maybe we are not very comfortable with giving that lower price today.
And of the expansion that we are doing over the next 3 years, how much of it is for expansion, capacity expansion in our existing products, and how much of it would be for newer products?
To say 30-70.
So 30 is for expansion into existing products.
Yes. And
so bulk of it, around 70% of the 250 crore capex that we are spending on over the next 3 years, you're saying would be for new products that we don't make currently.
Yes. We do not make, or we make in a very small quantity today.
Okay. And this 18 to 20% you see growing for the next 3 to 5 years?
Yes.
CAGR?
Yes.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Anupam Agarwal from Lucky Investments. Please go ahead.
Yeah. Hi, sir. Good morning and congratulations on the great set of numbers. I just wanted to understand on the export front a little more. I understand we have this quarter aberration where we sold domestic more than exports. On a longer term basis, what sort of domestic and exports mix one should assume?
Actually, your voice is not clear.
Hello, am I audible now?
You're audible, but it is too. Yeah, your voice is cracking.
Yeah, I actually wanted to understand from the export point of view. I understand this quarter was an aberration in terms of the mix. Over the longer term, what sort of export and domestic mix one should assume?
Over the period, we want to touch around 60% export, 40% domestic.
Okay. If you could just elaborate a little more about the opportunity and the prospects we have in those markets, let's say the markets that we want to enter in the next 3 years. I understand US, Europe and LATAM are big opportunities for us. What sort of registrations, how many registrations, what are the size of those product registrations that we are doing? Are there any big players in those molecules that we might have to face? And, if you could just give some color there.
The exact number for future registrations we do not have now. But we have applied a lot of registrations. So some of the registrations we've already received. Last year we received 5 registrations in Europe. Registration we've received this year in US also. One we are expecting by the end of the year in US. There are a lot of registrations we have applied in and the Asian countries. In India also we've applied a lot of registrations which we will be seeing, which we will be getting maybe by next year end.
Right. So basically, new markets for us is your US and Europe, right? So how many products will be registering in the next 3 years in those 2 markets?
Applied registrations in Latin also. Time requirement in the Latin countries are more. We've said about US, Europe because we had applied earlier and we've received it. Latin maybe over the next 2-3 years we'll receive more in Latin. We are definitely selling today in Latin also, but the product profile would be bigger over the period.
By product profile, you mean the opportunity size of those products?
5 plus the existing also.
Okay. Can you give some details, some ballpark figure as to what the opportunity size can be in these molecules that you intend to either receive approvals or launch in the next 3 to 5 years?
Opportunity in the new products, you mean?
Yes, new products. Specifically for the export markets from US, Europe and Latin.
Yeah, as a whole, the product scope should be around $700 million, $600-700 million.
Okay, and any bigger player who is already in these markets that we are catering to, or these products that we intend to launch in the next launch these $700 million? Any other big player?
In India, we will not say there are any large players, but multinationals definitely are doing some business in this.
So we will be what, top 5 in them?
We will be
number 5 in top 5 as of now?
In the 5, yes. I think you are asking in the 5 molecules, you mean to say?
Yes.
Yeah, in the 5 registrations, yes.
Okay. Understood. Thank you. I'll get back in the queue. Thank you so much.
Okay.
Thank you. The next question is in the line of Rajiv Desai from Motilal Oswal. Please go ahead. Mr. Desai, please go ahead with the question. Your line is unmuted.
Hello?
Yeah.
Yes, I'm on the follow the same question to the earlier one. Hello, I'm audible?
Yes, sir, you are.
Just you said 250 crore capex for the next 2 to 3 years. What is the basically revenue potential we can generate from that capacity, and how much we can utilize the current ramp up the capacity from the current levels existing?
From the new products, you could say over the period, of course, because they are new products, we will be able to sell big quantities. But over the period, we could say 3.5x from the investment that we have planned.
Okay. And basically
better asset turns, because we are into both technical as well as formulations.
And so what's your basically current capacity for technicals and utilization? Technicals you said 65 currently or somewhere.
Formulation is around
55 and technical what's your basically?
Approximately.
Hello?
Technical is around 90%. Formulation is around 55%.
Can you mention any size and tonnage?
Tonnage currently it is around 15,000 metric ton per annum. So we must have added some, we could say, and we'll be able to touch around 16.5 thousand tons for now. This is both formulation and technical inclusive.
Okay. So at least we can expect 1,000 crore revenue additional after this capex addition to what we have currently of 1,200 crore. Am I thinking is correct, sir? In next 4 years? And with margins at the same level, we can expect improvement in the margins?
Margins, we say we'll maintain this. Of course, we always strive to sell at a better price. But yet we'll say we'll maintain this kind of margins and we'll be able to add another 1,000 crores from this.
Okay.
Like Q4, you saw better margins. This quarter, you've seen slightly lower, but in this range. Around 18.5-19% we've been able to maintain this quarter also. So we strive that we will always have a better margin profile. In case also we try to maintain 18%.
Okay, and so all will be done through the internal accruals. Capex?
Yes. And mostly today we have good internal accrual, so yeah, currently entirely internal accrual.
Anything in front in terms of value addition where you can see improvement in margins and there's again an enhancement?
Pardon?
And you can see the growth in terms of earnings?
Pardon?
Any value-added products to be like which can improve our margins or anything apart from the growth from this capex? So I just wanted to see how our earnings can grow for the next 5 years down the line.
There is a good possibility the new products would have better margins.
Thank you. Ms. Desa, I would request you to return to the queue for any follow-up.
Thanks a lot, sir.
Thank you. The next question is from the line of Deepak Kolhe from BNK. Please go ahead.
Thanks for this opportunity and congratulations, sir, for good set of number. Sir, my first question is, do you think the growth in the domestic business continue to remain strong? And which are the molecules you see a strong growth, if you can mention that also? And basically my question was like, do you think that this... Hello, can you hear me?
The question was not clear.
Hello, is it... am I clear now? Hello, can you hear me?
Yeah, clear, okay.
Sir, do you think the growth in the domestic business continues to remain strong, and which are the specific molecules you see a strong demand in the domestic market? And do you think that this kind of growth is sustainable in the domestic market, sir?
This kind of growth is sustainable or not? So
yeah.
It would be very tough for us to tell currently whether this kind of growth will be sustainable, because once the export market opens up, definitely if we get a better margin profile in the export market, we would push more in the export market and not domestic. Okay. But definitely we have a lot of registrations in pipeline, so there will be a lot of new products that we launch over the next 1 year.
Mm-hmm.
And that would add to our future growth in the domestic market also.
Okay. Mm-hmm. Sir, you have also mentioned that the revenue growth of 18 to 20%. But if you can provide, sir, any specific to the export and domestic, that will be great, sir.
So currently it is 50-50. So our focus has been, we've always told that we focus more on exports.
Mm-hmm.
With a bigger base, as our turnover grows, that domestic and export, that turnover also looks big.
Okay. Mm-hmm. Okay. And sir, as you have mentioned that there are new product already launched. So can you please talk about this? And have we get any product registration in the US and Europe, sir, recently?
In US, we have received 1 registration this year.
Okay.
US, we have received 4 registrations. And this year we feel we'll receive 1 more.
So can you please just talk about this product specific, for example, in the US, what is the product molecule which you have launched, and in Europe, these are the 4 molecules. Which are these molecule specific? If you can, sir, give, sir.
They are mainly from the pyrethroid range. In Europe, one herbicide we have applied, which we are to receive registration maybe in this quarter.
Okay. Mm-hmm. Okay. And sir, my last question is, expenditure is very high, sir, for this quarter. So which are these factors led to this? And do you see that this other expenditure in the coming quarters will come down?
No, I don't think our other expenditures are very big.
If compared to sales, is almost around 11 to 12% for them.
Yes, but if you look at the Y&Y, there is some jump, like more than 40% jump in other expenditure.
Sales has been grew around 32%, and our other expenditures grew about around 38% in the same kind of range.
Okay, sir.
Reason for it. Because mostly expenditure in the variable in nature.
Means I just wanted to is there any factor, because freight cost has gone up? So is there any cost that has gone up as compared to last year, which is which included in that other expenditure? Is
Rightly said, the freight and other distribution cost has gone up, and we already passed on the customer for that.
Okay. Okay, sir. Thank you, sir. That is from my side. Thank you very much, sir.
Thank you. The next question is in the line of Hemant Shah from Eda Wealth. Please go ahead.
Thank you for this opportunity, sir. I just have one question. How many registrations we have, sir, you said, total as of today? And how many we have applied for? If you can just give the approximate number.
We have around 375 registrations. How many we have applied, that figure I do not have currently, because we continuously apply registrations based on what our marketing demands. So we have a dedicated registration team that keeps applying registrations.
Okay. And how many registrations we received approval last year in FY 2021, sir?
Maybe around, we'll have to check. Exact figure I don't have currently.
All right, sir. No problem. And this is it from my side. Thank you so much.
Thank you. The next question is from the line of Jay Prakash, who's an individual investor. Please go ahead.
Yeah, hi, sir. I mean, look, my questions have been already.
Thank you. The next question is from the line of Varshit Shah from Veto Capital. Please go ahead.
Hi, thanks for the follow-up. So my question is on the capital allocation over the
Mr. Shah, would request you to speak a little louder. Thank you.
Can you hear me now?
Yes, sir.
Yeah, so my question is on the broader capital allocation over the next 2 to 3 years. If I just do a back of the envelope calculation, you're going to generate anywhere between 600-650 crores of cumulative operating cash flow over the next over FY22 to FY24, and the capex plans which you have outlined is somewhere in the range of 250 to 70 crores. So despite such almost 3x expansion in capacity, you will still left with surplus cash, maybe definitely in FY24 end. So any thoughts on the utilization of this extra cash which probably you will end up generating by end of FY24, and any thoughts on the capital allocation side?
It's a very good figure that you have 650 crores. So whatever the figure, maybe around 500 or so. If we see, we'll be over the 3 years, we have anyways, as on date, we have committed around 250 crores. And with every passing year, definitely we'll have new thoughts, new investments, new tie-ups, new relationships, where we'll accordingly plan our investments, maybe in registrations, new geographies, new products. As I said, in R&D also, we've been talking of 5 products, but there are a lot of other products which are also we're working on. But we have not started any registration kind of activity to tell you that we'll be able to sell immediately, maybe from the next year or so. Maybe we may start some registration activity this year, and their sales may come maybe 2 years from now or so. So that's the thing. So majorly, any additional capacity, the capital that we have would go into newer investment opportunities that we get over the period.
Sure. And any is the management also open to any inorganic acquisitions or any thoughts on that?
We will not shy from it. If we get a good opportunity, definitely we can look into it. We have good capital accruals that way, and any good synergistic opportunity that we get, we would like to take it.
Sure. And so my second question is on this new product development. So I think as you mentioned, 4 to 5 new products coming in your FY23 and 24 each. Are these products ready at your R&D end? That's my question, especially the ones you're launching next year. So that's my first question.
Yeah, it is ready.
Okay, so probably you would be at least fairly cost competitive on these new molecules and hence the right to win the business?
In 3 of them, yes. Some we are not fully backward integrated, but there is good scope. So we would like to increase our turnover and then plan a backward integration. So that would reduce our capital expenditures also. Once the product is set, we can go backward. So we've been ready in our R&D level at least for backward integration, but we are not planning for complete backward integration.
Okay. So the capex for backward integration would be slightly in a phase manner for one or two molecules. The rest you are ready.
Yes.
Okay. Understood. And sir, one last question on the overall outlook. So given that in the domestic market, the Kharif season had slight hiccups in terms of rainfall, but now there seems to be a pickup. So any general observations and commentary, especially from a Q2 perspective in the domestic brands business?
See, generally Q2 for Indian companies is good. So initially you're right that this quarter started dull. That is June went well, July was a little dull. But now things are picking up and we see there's a good uptick, and by September we'll be able to see a good result also.
Sure. And the domestic brand business, you have been able to take the price hikes as well to pass on the higher technical cost as well as your packaging cost.
Yes, that way we have been able to pass on. Generally, the technical is always the base, and then the calculation starts from there. So wherever possible, we have increased. Mainly, we've not faced any such issue in pricing, and we've launched a few new molecules also, which are high margin molecules. So that way, we'll be able to see good margins in our branded segment also.
Sure. Thank you so much. I'll again get back in the queue.
Thank you. The next question is on the line of Karthik Bhatt, individual investor. Please go ahead.
Yeah, thanks for the opportunity. Am I audible?
Yes, sir.
Yeah. So I understand from the previous call that we have a presence across the range of pyrethroids, whereas a few of our peers have presence in one or two pyrethroids only. So I wanted to understand if you can throw some color on how does the cross-sell and all work in this industry. So let's say if we are selling one pyrethroid to a customer, so are there opportunities to cross-sell others to the same customer, or how does that work?
Yeah, we are able to sell across the customers. So now in our brand, we have all the pyrethroids in our brand. Similarly, other companies have in the same fashion all pyrethroids. We are not across all pyrethroids. As a group, pyrethroids is a group of around 10 to 14 products. In that we are active in 5. And we would like to add more also because we are strong in it. We like to strengthen our position in the pyrethroid segment also. So yeah, cross-selling is also possible. So most of the companies who have, for example, Cypher also have permethrin, also have alpha Cypher. So we sell one customer, we sell the entire pyrethroid basket.
Okay. And sir, in terms of client concentration, am I right in understanding that about 19 to 20% of revenue comes from top 10 customers?
Yes. We have a very vast customer base.
Right. Are we looking to maintain this range, sir, going forward also, or are we looking to increase it slightly, or are we...
Maintain it. Because we are not into any contract business, that's why we have a very diversified customer base. Maybe in future, if any new opportunity, better opportunity comes, it may swing, but it should not impact a lot.
Sure, sir. And on working capital days, sir, can we expect the same year, or is it likely to change over the next 1 or 2 years?
Right now, working capital days is around 90 to 95 days, and it will be in the same range in the going forward.
Thank you, sir. That's helpful.
Thank you. A reminder to the participants, anyone who has a question at this time, please press star and 1 on your phone. The next question is from the line of Bhavya Gandhi from Dalal & Broacha. Please go ahead.
So Sir, as I understand, largely the market is through organophosphates only. We are focusing more on pyrethroids. Can you just explain the difference between, although do we sell organophosphates along with pyrethroids?
I don't think largely the market is organophosphorus. If you see the top 15 products globally, 5 of them are pyrethroids. Pyrethroids as a product group are safer as compared to organophosphorus products. And a lot of organophosphorus products already, if you see, few of the organophosphorus products are already banned in Europe. And there is very active discussion in US also when it comes to some of the pyrethroid organophosphorus products. Happens like there is active talks that chlorpyrifos and acephate will be banned in US market. Chlorpyrifos is banned in 2019 in the Vietnam market also. So the share will go directly to the pyrethroid segment because that's the next biggest insecticide segment, in the crop protection market.
So, but if we compare on the price front and the productivity front, are organophosphates more effective as compared to pyrethroids, or are pyrethroids more productive as compared to organophosphates?
They are both contact insecticides. So the moment either organophosphorus or pyrethroids come in contact to the pest, so it's a knockdown effect. That's why you've seen a very, very good growth over the years, even though organophosphorus is an older compound, but pyrethroids over the period has grown in a very good pace because of its mode of action. And we feel that's one of the major USPs that any switch from the organophosphorus would be directly to pyrethroids. In fact, we today our pyrethroid range we've been selling to government also for vector control. So whether it is malaria, dengue control, so you can that itself shows that that it is safe to humans also in the dose that is recommended by the government.
Right. Sir, how long will it take to switch from organophosphates to pyrethroid? Like any timeline? 4 years, 5 years? Will the entire market shift, or will organophosphate compete in the longer run with pyrethroids? Although it's banned, I understand, but still.
That if we have some good, if you would have some good government link in US also, we'd be very happy.
Okay, sir. And on the pricing front, which one is more cheaper as compared to organophosphates and pyrethroids?
See, it is generally we should not see price as a point, because if you see there's products which is 300 rupees, there will be pyrethroids which are 5,000 rupees also, but the dosage is important. Per acre, what is the dosage of CPP versus what is the dosage for alpha-cypermethrin is important. So that also is one of the reasons why we say pyrethroids are environmentally safe, because the dose is less. So instead of putting 300 ml, you need to put only 100 ml, or you need to put only 50 ml. So less chemicals applied across the field. So, and gives almost similar results.
Okay, sir. Yeah, fair enough, sir. Yeah, that's it from my end.
Thank you. Next question is in the line of Deep Patel from GG Enterprise. Please go ahead. Mr. Patel, your line is unmuted. Please go ahead with your question. There seems to be no response. A reminder to the participants, if you have a question at this time, you may press star and 1. As no further questions from the participants, I would like to hand the conference over to the management for their closing comments.
Yeah, thank you very much for the extensive participation and questions. I hope we have answered well. Up to any questions, there may not be a perfect answer, but the best of our knowledge we answer nicely. I hope it is nicely and satisfied their answer. If there is any follow-on questions, we will be happy to answer in future also or through mail. Thank you very much for your active participation and questions.
Thank you very much, members of the management. Ladies and gentlemen, on behalf of Heranba Industries, that concludes this conference call.